We live together, we die together, we pay taxes together.
What was your biggest capital gains tax frustration? What was the issue?
The reality was, look, we got a group of people here that we've got a syndication. We've got 32 people in, okay?
Yep.
And when we're done and we sell the asset, not all 32 of us are going to want to go the same direction, right?
Right.
So if we want to do a 1031, it's kind of an all or nothing thing, right?
Right.
They got involved with me. Maybe they didn't want to go 5 years in the deal. All these questions can be resolved in a way that they never were before, right?
Right.
So now you can look at it and you can go, you know what? I just got crushed this year in business, right? I just had some things happen that were horrible, right?
Right.
Now was a great time to harvest my gain over here, take that gain and wipe out, because I have losses that I can use, right?
Right.
Somebody's getting divorced and they're dividing assets. We got to divide this up. I don't want to sell it. She wants to sell hers or he wants to sell his. You can do that. So it takes it takes everything that we have to use to do as a group.
Right.
That we either decided that we were going to do together, or we live together, we died together, we pay taxes together, right? Now we have the ability as individuals to decide what our long-term plan is with our taxes, with our income, right? So think about this. I mean, if you do a value add deal, there's the point in the deal where you're taking $1 million asset and you're turning it into a $2 million asset, right? That's where the gain is. That's where typically young people love the appreciation. The older people, and I say that just because the older people are looking for the cash flow. They don't want to work anymore. They're looking for that mailbox money. They hate that first part, but they love that second part, right? They love the cash flow. Well, what if I could get involved in a deal, take the appreciation, sell my shares, treat them as it's a sale of property. I can treat it as my own individual 1031, go about my own business, sell it to somebody that's looking for the cash flow, and this asset as a whole doesn't even ripple the pond of what everybody else wants to do.
Right.
So the tax benefits now become the personal choice instead of the GP's choice about what's going to happen to the LP investor.
Yeah, absolutely. So, this is definitely going to disrupt. Right now with the Deferred Sales Trust, I think one of the things you've mentioned it a couple of times, so I'm assuming you're decently familiar with it, but it's different than a Delaware statutory trust.
Yep, it is.
So I just want the listeners to know that. But that's one of the huge benefits to a deferred sales trust is you can sell your asset, any type of asset. It doesn't have to be real estate, and you can diversify into different things. So people could sell their primary home, that has a $600,000 capital gains tax liability, and they could go right into Shannon's deal with their assets and buy tokens up and their apartment building that you're building in Boise.
Right.